Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Friday, August the 20th, 2010. Well, a continuation of the trend to the upside, and previously we had 2 candles ago a doji candle, and we suggested there was potential for a change of trend to the upside. We did have that change of trend, but that change of trend occurred on an indecisive spinning top type candle. So there was potential for a change of trend back to the downside, which didn't happen. If we were looking for any change of trend, we certainly would have been looking to the low of that candle for a potential lower high and lower low, and certainly that hasn't occurred in this case. That change of trend did, however, occur on a green-bodied candle, and today we've had a nice extension of the size of the body of the candle, which tells us that the buyers have made net bullish progress today, but they've extended the amount of bullish progress that they made on the previous day. So quite a nice bullish candle. One slightly negative factor is the shadow on the top of the candle, and that represents selling coming in, and that coincided with the resistance level at 83.22. So we have this zone of resistance from 83.22 down to 82.86. The market's closed within that area, and certainly closed just above this swing high at 83. But the failure to close outside of 83.22 with a bullish close may be significant for this market. So that high does become very important for this market, for us to look to a potential continuation of the trend to the upside, with the market making higher highs and higher lows. Now, the market is trading down below the cloud or the Kumo, so it does retain its overall negative bias, but the market is trading up above the Tenkan-sen and the Kijun-sen, which means that in the fast-term and medium-term timeframes, the market is bullish. Now, we've also had a crossover of the Tenkan-sen up above the Kijun-sen, which is a bullish signal with Ichimoku charts. And that signal has occurred down below the cloud. So because that's occurred below the cloud, it's only a fairly weak signal. So we do need to be very careful if we are going to trade that signal. And certainly when we consider that we have this resistance at 83.22, then we probably don't want to go long at the moment. But certainly if we have a solid close up above that region, it may be a good area where we could look to being long. Now, if the market does continue trending up to the upside, then we have potential resistance offered around the cloud, and the market will most likely interact around the 84.23 region, and that coincides with this area of downside price rejection around the 84.40 or so level. So there is potential resistance for this market fairly close by, and then certainly all the way up through the cloud up to probably around about 85.5 or so, or 85.40. There is potential for strong resistance. To the downside, we once again have this area around 82. We can see here on 1, 2, 3, 4, 5, 6 occasions that 82 region was tested very, very strongly by this market, and we've had buyers coming in each time. So that will be a very big level for this market. One would expect that if we do have a change of trend to the downside, then the buyers should come in again there. The area just below is where we have the Kijun-sen and the Tenkan-sen trading from at 81.97 and 81.76.5, and that area also does offer potential support for this market, and certainly down to 81.4. So for this market over the next few days, certainly the area above 83.22 is very important, but the area down around 82 becomes important if the market is looking to trade off at all.